Hello, everybody. Great to welcome all of BD Nation to this Monday night, May the 10th of 2021, our next episode of Wealth Wisdom with Gary Fichardt. It's great to be with all of you this evening or this
É
morning,
bom ver vocês
depending
essa
on which
noite.
part of the world you happen to be in. We welcome all of you. In fact, drop it into the chat room right now, the country that you're dialing in from, so that once again, as we do every single Monday night, we can see this tremendous United Nations of a ByDzyne family as we continue to establish a phenomenally effective global footprint. Today, on this May the 10th, follows by one day, a very important day. I know at least in the United States, yesterday was the 9th of May. We had an incredible celebration of Mother's Day. And I know that in many other countries in the world, you also celebrate the incredible mothers that exist in all of our lives. I know that right here in my own home, we had 4 generations under one roof, a great-grandmother, grandmother, mothers, and great-grandchildren. So it was awesome to be celebrating such an important day as Mother's Day. I hope all of you mothers that are on the call know how very important you are, the remarkable responsibility and duties you carry out. And now we're all together again in this next episode of Wealth Wisdom with Gary. And again, as you all know, we always have an amazing opportunity every single time we're together with Gary Fichardt from MTI. We get a phenomenal amount of information delivered with great knowledge and great passion from Gary Fichardt, a South African transferred to the United States. And now the opportunity that we have every few weeks is to have Gary and his incredible depth of knowledge with all of us as he shares with us important kernels of information to make sure that we all can take great advantage of the Forex education that is available because of our collaboration with MTI. That's what brings us together this night for additional information regarding our Smart Market Academy and the opportunity that we all have, especially the members of BD Nation, to take advantage of this knowledge to increase your wisdom, increase your knowledge, increase your wealth as you learn more of the ins and outs of Forex education. And what a great opportunity it is for us every single time. And this night is no exception, to be able to share this hour with Gary Fichardt, one of the best, one of the most elite Forex educators anywhere in the world. So without any further delay, it's my great honor tonight to turn the mic officially over to you, Gary. We're looking forward to everything you're going to share with us. You're on mute, Gary.
Okay, looks like there we go. Should be good right now.
You're good.
All right, fantastic. Good afternoon, good morning, good evening to everyone, and thank you, Dave. I appreciate that. And today is going to be something a little bit different, where we actually take a look at a strategy that we are looking at. And I'm going to go ahead and share my screen right now so everyone can see what my screen looks like. There we go. So what we're going to do is we're going to take a look at a strategy that we've been following here in not only here at ByDzyne, but also in my trading room. And we've been looking at this from a short-term perspective, which means that we're looking to take quick profits every single day. Now, granted that not every day we're going to get opportunities that we can actually take advantage of, unless you're looking at a lower time frame. When you're looking at a larger time frame, it's really tough to be able to pick up trading opportunities every single day. But when you scale down and you look down at a lower time frame, the opportunities are going to be there. And so let me go through the steps before I go into a trade opportunity. Let me go actually and talk about a trade setup and what we're looking for when we look for these trade setups. Now, as a ByDzyne student, you get access to the what we call the BD app, the ByDzyne app. And through the ByDzyne app, we send these trade alerts called the Pip Grabber. Now, I want to give you a little bit of teaching on this so that you can better understand how to use these trade alerts and make better trading decisions when you get these alerts. So let's go through the steps of what it is and what we look for. So firstly, number one, in the ByDzyne app, you're going to get a trade signal. And in the trade signal, I've just pulled up a screenshot over here. In the trade signal, it's going to tell you that you should be either looking to open up a buy order on the US dollar Canadian, open up a buy order or a sell order on the Aussie CAD. It doesn't matter which currency pair it is. We're going to go ahead and list it up here. You can see here is another order of the Canadian Swiss franc as a sell position. And so as we go into the details, I'm going to explain to you exactly what it is that we'll look for. So I'm going to open up the Swiss. There it is. This is the Canadian Swiss right here. So when you get the signal to go ahead and to buy or sell a certain currency pair, let's take this one for instance right here. I'm going to go ahead and circle it right here. Okay. So there was a trade alert to go ahead and sell the Canadian Swiss franc at a price of 74.42. So what we're looking at is we're looking to enter at 74 and it's 42. So 74.42, which is right about here. Okay. So this where this blue line is marked off here, it's telling us we want to go ahead and sell. Now, the good thing is, traders, you don't have to look at any time frame. Unless you want to look for something specific on any sort of indicator you're using to confirm your entry point, or you want to look at oscillators. Now, I'm going to go ahead and throw a couple of things because some of you might be saying, well, Big Dog, what is an oscillator? Well, an oscillator is something that's measuring the oversold condition of the market, which means when price gets into an overbought condition, the oscillator would move into, let's say, an overbought area, which is normally 80% of the range. So the range is from 0 to 100. And so 80%, sometimes even 70%, some traders like to use the 70% rule, which means 70% of the range, when it goes into that area, it's called the overbought condition. Now, what it means is the market's looking to turn around and head in the opposite direction. And so you could add on any oscillator, and we have many oscillators here in SmartTrader that you could possibly go ahead and add. I'm going to go ahead and use a very common oscillator, and that is called the RSI. So if I go over here and look for the relative strength index, which is I always miss this when I'm looking through this. I think I got it all the way here at the top. Sorry, I actually highlighted one of my favorites. And there it is there. So the relative strength index right here, if I add it onto the chart right here, and I change the settings to what I like to use is the 21. So 21 setting right here. Let's make this a little thicker. I'm going to make it 3. And you can see right here, here's the overbought value here and the oversold value. So you can go ahead and use, some like to use 80. I like to use 70 and 30. As the overbought, oversold region. And I'm going to change the color right here to black. And I'm going to go ahead and make that dotted. All right, you can customize it to however you want it here in SmartTrader. Now, for those who are wondering what is SmartTrader, SmartTrader is your trading platform where we make all our trading decisions on. It's a great platform that you can connect your trading account to as well. And you can make trading decisions, but also place trades on the platform as well when you connect your trading account to the platform. Now, I'm going to go ahead and save this onto the chart right here. And so I have it now added on. So a lot of traders would look for this oscillator to indicate whether or not it's time to go ahead and sell, time to go ahead and buy. So just as an example, if price, and let's find where price actually goes here. Here we go. If you look over here, you can see that price moves into an oversold condition right here. Right? You see where it goes here and touches the line right here. So at this point, it's indicating that traders should be looking to buy. And when price comes right here to the top right here, it's indicating that price is going to look to sell. Now, remember, when we look at the Pip Grabber strategy, what we're really looking for is to grab 20 pips in the market at a time. Now, when these signals come up, some educated traders, and that's why it's important, very important to be educated about how the market moves, because when you're educated about how the market moves, then when you get these signals, you can filter the signals out by using different type of indicators to help you make a trading decision. And using filters like oscillators, using filters like, overbought, oversold conditions, help traders to be able to determine, all right, whether or not it's time to trade that signal or whether it's time to hold on to that position and wait until the market sets up with maybe something a little more convincing. Another opportunity that traders also learn as they educate themselves is how to use trend lines. Now, a good example right here would be something like this. If I had to take a trend line and move it across the line, the lows right here, across these lows, you can see how I'm connecting the lows right here to a point where the market's now trading below and on the right side of that trend line. And when it does that, this is an indication that we may start thinking about selling. Now, it just happens that we did get a signal today, and it told us to sell at 74.72. Now, we don't have an oscillator in an oversold condition right here, but what we do have is we have price coming back to the backside of this trend line, indicating sell opportunity. So when you look at this, listen, traders, what are we really looking for when we're looking for trading opportunities? We're looking for the highest probability, right? We want to find the best and the highest probability. And that means that when we find the highest and the best probability using all these filters like trend lines, oscillators, everything we teach here at Market Traders what to use, what it does is it takes a signal, which is important because it gives you directional bias. You take a signal and then you use that signal to be able to filter out the decision making based on these tools that we provide you in SmartTrader.com. That is the trading platform. And so as you look over here and you notice that price moving in the backside of the trend line, it's telling us that we should be selling. Now, what we would do is we would simply go ahead and say, well, I'm ready to take on the sell. Now, the great thing is it doesn't matter what time that signal came through. What's important is that was the last signal on that particular currency pair to go ahead and sell. Now, the very most important thing about this is if I choose to want to sell based on that signal, I must not trade it lower than the signal, because if it tells me I should be selling at this level right here, then as long as I get in at that level or better, which means that if price moves up higher, I could sell it up here at the top because I'm getting in at a better price than what the signal came in at. What I don't want to do is if the signal comes in at this price right here and the market is down here, let's say 10 pips away from the entry point, it would be silly for me to want to get in now when the market's already moved 10 pips, because all we have left is 10 pips before we want to actually close out that order. So the opportunity is a lot less. So as I look at the trade signal, as the trade signal comes through and tells me that I should be selling at 74.42, I notice that price is trading right there at the signal. Now, whether that signal came through 3 hours ago, 8 hours ago, 10 hours ago, it doesn't matter. What's important right here is that the signal came through, and I noticed that we haven't closed out at profit yet. So which means that the market is still creating an opportunity for us to go ahead and sell. Now, what we do use here, we use tools to get into the trade. The tool that we're going to be using is called the matrix tool. All right. Now, it's very simple. On SmartTrader, all you have to do is go ahead and right click on the page as I've done right here. Right click on the chart. And you'll see down here at the bottom, it says here, add matrix. I'm going to go ahead and add the matrix. Now, this window is going to pop open right here. And all I'm going to do here is I'm going to go ahead and actually use my orders going to be stealth orders. Now, what is stealth order? Stealth order means that we're using hidden orders. Okay. I'm going to go ahead and add in 5 orders right here. I'm going to change my lot sizes according to my risk management as I want to go ahead and manage my trades. And we talk about that. In fact, if you go through the ByDzyne education through Market Traders, you will see that inside the SMA, which is the Smart Market Academy lessons, you'll see we talk about how you'll be able to implement this tool and use this tool in the software called SmartTrader. Now, I'm not going to go ahead and give you the details of this, but I'm going to go take you from a high-level view. So from a high-level view, we'll go ahead and enter our orders in here. We'll go ahead and place our orders 25 pips away. I want to place my orders above the market because I want to sell, because the signal that came through the BD app, which is the ByDzyne app, told me to go ahead and sell. I want to close out on 20 pips, right? Close out on 20 pips. So all I need to do now is execute it by clicking the OK button right here. Once I clicked OK, you'll notice that the orders are now going to be placed in at market. My first order will be placed at market. If I go ahead and take a look over here, you'll see here's my first order being placed. My order's been placed by the matrix tool, and the other orders are now set up above the market, which means, traders, that why do we enter with multiple entry points? Because there's a lot of traders that say, well, Big Dog, why do you enter with multiple entry points? Well, you see, traders, what it does is it creates an opportunity for us to get out of a position. Either we're taking profit or we're getting out of break even, but it allows us to be slightly, or gives us slight leverage on where we enter. It gives us a little bit of flexibility as to where we enter. So if the market does go a little bit against us, so if we do see the market going against us and it goes up to the next order and we get picked up on a sell there as well, now we've got two orders in. And so if the market drops back down to the first order, then I have made from that order to this order, I've made my 20 pips. So which means the trade will close out. So it gives me a little bit of room for error. So if my first order was not correct, if the market was still going to go up a little higher, at least then I've given myself a little bit of room for error so that it picks up my second order. And if the market then goes back to my original first order, it will take me out of the trade at 20 pips. Okay. So the reason behind multiple entry points is so that we can have room for error. But that doesn't take away the fact that education and understanding, all right, how, what signals I really want to trade, we need to be paying a lot of attention to that, all right? And that's why we do provide here at Market Traders. We provide not only these trade signals, but we really want to educate you on what these signals mean and how you can benefit from these signals so that you don't just blindly follow these signals on your own. That you can actually say, hey, you know what, Big Dog, I want to be a little bit more particular about what signals I want to follow just because I have the education behind me that tells me that it may not be the right time to enter on that particular trade. But it's definitely the right direction, but I've got to get a filtered signal. Filtered signal would be exactly what I just spoke about earlier on, about using oscillators, using trend lines, and there's multiple things that we use in our analysis that could benefit you from making that decision and having better fillers or filters to be able to help you make the right decision on the currency pair that is traded. Now, take a look right here. So yeah, we've got a signal right here to go ahead and sell. Now, what do we do right after this? Once we've placed the trade, what do we do? Nothing. We just wait for the signal to go ahead and, sorry, not the signal, but the trade to now play out. All right. And so you'll see that once we get to a point where the signal has reached its 20 pips, you will get another signal coming through on the ByDzyne app that'll tell you we've closed out that trade. Take a look over here, just above here. You can see here, just above here. Let me go ahead and mark it off right here. Just above, where is it? Yeah, we had an order right here that said sell the Aussie Canadian. And then we had another order that came through about an hour and looks like 15 minutes after that, and said, let's go ahead and take profit of your 20 pips. So there's the closed order on that order. So you will get a closed order signal coming through to say close that order. So if you weren't at your computer and you do see your ByDzyne app pop up a message saying close that order, you could always simply go to your phone and close out that order manually. You don't have to have the system actually closing it out. You can simply just close it out on your phone and just manually close that order. All right. So you have those options to be able to do that. Now, let's take a look at another example right here. Another example here would be just recently we had a order saying sell the Aussie Canadian. So let's go to that chart right here. If I go to the chart, the Aussie Canadian, which is this one right here, then you got to look at this and say, okay, it's telling me to sell Aussie CAD. Now, if you were just to blindly follow that right there, you would go ahead and sell. What is the price it's telling you to sell at? It says sell at 94.93. I believe that is what it is. Yep, 94.93. So let's go ahead and mark that off. So remember, this is the steps that you really want to take. Anytime you get a trade signal, the first thing you want to do is you want to acknowledge where that order is, because if that order came, let's say 3 or 4 hours ago, you want to be able to figure out whether or not it's still a good time to go ahead and trade that trade. So if I go ahead and put this in right here, and I look for that 94.93 level, 94.93 would put me up right about here. Okay, there it is there. Now, everyone can see that the price that this came in right here was well above where price is trading right now. In fact, you can see that price dropped down approximately, price dropped down. Oh, there it is. Oh, my bad. I just realized it was a close order. There it is. So price, actually, we entered on a trade right here. Price dropped down 26 pips. So we actually got out of this trade. And I just noticed it now that here is the close order. So this was the actual buy order right here. Sorry, the sell order. That was a sell order. And this was the order right here saying close out at 20 pips. You can see right here, it says close out 20 pips. So that trade right there, we got in and price went down and closed the order. Now, what's important for you to notice, if you get on your ByDzyne app, if you see that the app tells you that we have closed out that order, then it's certainly not time to go ahead and look into this trade. So the first thing you've got to do is saying, hey, we got in on that trade, or these people were looking to get in on that trade, but the order closed out already. So we have to move on. Now let's go take a look at, I think there was another order that hasn't closed out. Let's take a look right here. Oh, take a look over here a little bit above the other orders. You'll notice that here is a US dollar CAD buy order at 20.92. 20.92. Well, let's take a look at that. Let's take a look at that trade. So here it is right here. Let's go ahead and mark off that order, and that order is at 20.92. So if I go ahead and mark off right here 20.92, it is right here. So here is 20.92. Now that order came through at around about let's see the time here, 16:30. That is New York time. So let me go ahead and take a look at the time. 16. There we go. It's right about here. Let me see here. Yeah, there we go. So the time that order came through was right about here. Let me put a vertical up here, about there. All right, so this is when the order came in to go ahead and buy, right there. Now, if I take a look at where the buy order was, the buy order is around about 12 pips. Now, it didn't quite hit our 20 pip target. It came pretty close right here. But we are 12 pips away from that order right now. Now, if I was a trader that was looking for a trade opportunity and I came into the trading table and I looked at my ByDzyne app and I noticed that order was placed at 4 or 4:30 this afternoon, and I look and I go to my charting software and I go ahead and look at that level, and I notice that level is about 12 or 13 pips above where I'm currently trading, it's definitely not time for me to want to go ahead and trade that. So you see, traders, we have to be smart about these signals too. You know, I certainly don't want you to be oblivious to the signals and just blindly follow the signals without actually knowing what you're actually doing. It's very important that you are provided education to understand what are you doing and how you're following these signals. All right. And then these signals that come through, there's something important that you have to note as well. Because we enter in at multiple entry points, all right, you may not be that trader that has picked up a signal that we have maybe followed 3 days ago. And 3 days ago, we picked up a signal to buy on a certain currency pair, and we leveled in. And when we leveled in, let's just show you an example. I'm just going to give an example right here. So let's say we had a signal on this particular currency pair, and let's say I'm going to move the time frame a little bit right here. Let's say the signal came through a couple of days ago, and we had a buy signal right about there. And we went ahead and we leveled in at every 25 pips. All right. So as an example, I'm going to say something like this. So let's say we entered here. All right. But price moved further down south. Then price moved further down south, and price moved further down south to a point where we've got 4 entry in. All right, 4 entries. Now you're probably looking and saying, well, big dog, it looks like we're already paid out over here. All right. So let's just say, for example, we did not get paid out. Let's say we did not get our 20 pips there, but we entered into this market multiple times, 4 times. So which means that you would get a buy signal right here. You would get a buy signal there, buy signal here, and a buy signal right here. Now, what you would probably not notice is that we haven't had a close signal yet. That's because we're still in on that trade. And so for traders like those, they come in and they look and they say, oh, I see a signal here to go ahead and buy on the US dollar Canadian. And so what they do is they go ahead and buy here, but this is their first entry point. And if this is your first entry point, it doesn't matter if I've gone in or someone else has gone in and they have multiple entry points. What's important right here is that you go in and that you look for your 20 pip profit. All right. So if you get your 20 pip profit and I haven't sent a signal, the ByDzyne app has not sent you a signal, say, close out those orders, it doesn't necessarily mean that you shouldn't close out your orders, right? It means that you've made your 20 pips, you get out of the trade and you close out your orders. So don't be completely reliant on just waiting for the close trade order to come through on a particular currency pair, because you may have got in on for the first time where we have multiple trades in and we haven't captured our 20 pips net profit yet. And you have. So you go ahead and you close out your trade and you take your 20 pips and you look for the next trade signal. That's what you do. You look for the next trade signal and you follow the rules just like I've explained to you. Go to the chart. And I'm going to go through this carefully once again. Go to the chart. Identify the level that the trade signal came in. Take a look and see where the trade signal came in and identify whether it's still a good time to get in. Now, what would that mean? That means that if the trade signal came in at a certain level, you'd have to get a much better price that gives you the opportunity to still make your 20 pips, all right? And you should not get in on a signal if the trade has already moved towards our 20 pip target. If it's moved 10 pips towards our target or 15 pips towards our target, don't go ahead and get into that trade. Wait for the next trade signal. There's enough signals to go around. You can certainly wait for the next signal. But if you do get the opportunity and the price is at the right level, which means very close to where the signal's at, or even at a better price, and you get in using the matrix tool by going ahead and right-clicking onto your chart, clicking on Add Matrix Tool right here, and then simply going ahead and going through the steps as we teach inside the education. Once again, go into Smart Market Academy and use the lessons there to understand what it is and what it takes to identify a trade, how to be able to implement the trade, and how to be able to trade the trade, okay? All right, by using the Matrix software. But also, we have a lot more education, not just on the Pip Grab itself, but on tools that you can use. There's different tools, indicators, oscillators, all of that good stuff that you could use to make great trading decisions. And when you come to my trading room, you'll see that in my trading room, which, by the way, as a ByDzyne client and student, you get access to my trading room where I go ahead and I talk about the different tools that I use in order to be able to place these trades. And so we identify in my trading room, we go ahead and identify what was the last signal on the currency pair. And then we take trading tools and trading indicators, and we apply that to our trading as well. Just a quick example of that would be something like this. If I go to my trading room right here, this is my chart right here, and I go to, let's go ahead and clear up this right here. And I go to the chart, you'll notice that there's an indicator down below. This indicator is called the FX Market Fusion indicator, which is part of one of our courses. And if you go to this right here, you'll notice that we've got these signals at the bottom right here. There's indicating the buy signal right here, which is indicating that we're in an oversold condition, all right? And those are the things that you could use to be able to identify trading opportunities. You see, to be educated in how the market moves is a lot better than blindly following any signal or any trader that you may have. Knowing why you're getting in on a trade and knowing the reason why you're getting on the trade is far better than just blindly following a signal that comes from. Because remember this, if the market goes slightly against you, you want to know why. You want to see what are the reasons why the market's gone slightly against me, and also you want to know how far the market could go against you. And so with that information in hand, it's important for you to understand exactly what makes the market tick so you can make the right decisions at the right time. So traders, the Pip Grabber strategy is helping traders to get in on trades to grab 20 pips net profit at a time. But using the Pip Grabber directional bias is just one of the things that you should do. Going into the charts and identifying those levels using the matrix tools, but also using oscillators and trend lines and tools that we provide you and teach you how to use here at Market Traders so that you can be educated and make educated decisions on when to trade them. Will help you tremendously to increase the probability on that trade, but also to be able to get you to a position of strength where you're not getting in on multiple positions, but you are getting in on positions that gives you the highest probability to success. So I hope this lesson has helped you. I hope this has educated you on exactly what the Pip Grabber is all about, but also how to properly use the Pip Grabber so that you can make better trading decisions and make better profits moving forward. So with that being said, traders, I want to thank the opportunity to be able to speak to everyone tonight. I trust everyone is going to have a blessed week of trading as you trade the Pip Grabber strategy. And I'll probably see you next time. Thank you, David.
Gary, thank you very, very much. Pip Grabber has taken everybody by great pleasure to be able to increase their knowledge about Forex trading. And there's a question that came up that I think it would be a perfect opportunity. You were speaking earlier about the trading signals and Pip Grabber. The question was, does a member of BD Nation, do they have to close the trade by themselves, or does it automatically close somehow? I hope I'm asking that question in the appropriate way.
Great question, and a question that comes up a lot of times. So this is the thing. This is where the education comes in, right? So when we go ahead and just as I mentioned earlier on, if I'm in on multiple signals, if the Pip Grabber signals have indicated that we've had like 4 signals of buying, let's say US dollar Canadian, and a trader comes in at the 4th signal and he decides that he wants to buy in at the 4th signal, then he's not going to get a signal with the ByDzyne app, the BD app, to close out that trade, because we have to close out all 4 positions to make up our 20 pips of profit. But the person that traded the 4th entry point, just like it's showing you on the chart right here, if he comes in over here, his first entry point will get him to his 20 pips before these 4 entry points get you 20 pips net profit. So you can close the trade out manually if you choose to. But if you're using the matrix tool, and you use the matrix tool to enter the trade, the matrix tool will get you out of the trade. All right, it will close you out, because if you look over here, we added in the matrix tool on this trade right here. And if I click on here, it says they close all orders on net 20 pips. So this software is designed to close that position out when you get to a net 20 pips profit. But I've said this, David, and I'm going to say this to anyone. Don't trust anyone with your money, okay? That includes systems. Even though these systems have got a very good success rate, I still want to make sure that I don't just simply go ahead and just allow a system to do things without me overseeing what's going on. So what I will do is I will keep an eye on my trade, and if the trade is in this 20 pip profit and the system did not close it out, which is likely not to happen, but if it does, then absolutely close manually out, and then close that system down. Go ahead and just click the system, just shut it off your chart, and you can simply go ahead and go on with business again. So the system is designed to close you out at profit, at 20 pip net profit. But if you choose to want to close out a position on your own, you absolutely can do that manually. You don't have to rely on the system.
Thank you very much for such a specific and a great answer. And Jane, to you, thank you very much for asking that question. And maybe just remember the words that you just heard Gary say, and that is, don't rely on anybody else or any system when it comes to your money. So Gary, thank you so much. It's been a very informative 45 minutes as we continue to develop a level of expertise around the Pip Grabbers that will allow everybody to have increasing levels of knowledge and hence success with their Forex trading and their Forex education activities. So thank you again to you. We will see you again in just a few weeks and look forward to that already.
David, I just want to say one more thing before I leave as a food for thought, right?
Great.
And this is this. Systems are there to make our job easier, but it does not take away the responsibility of the way we manage our account. And so that's very, very important for every trader to know, that systems help us to be able to make our life easy as a trader, but it does not remove the responsibility for us to be responsible for how we manage our positions and manage our trading accounts. And that's important right there.
Terrific information, and a great way to close out this particular episode by reminding everybody that the ultimate responsibility is on the person receiving the education and the training and managing your own account. So Gary, thank you so much for sharing that last final piece of golden nugget information with all of us, and we'll see you again soon.
Thank you, David. Appreciate it. Thank you.